Good afternoon. George Cavaligos for HFT Bonds. Well, if the game works, we'll go back to the well again. We play the Fed game. We know the Fed's buying tomorrow. They bought today. They bought bonds today. Tomorrow they have a pretty hefty purchase of notes. So we'll look to do the same trade again. It seems like somewhere overnight, whether it's in Asia or London, somebody comes in and sells the treasuries off a little bit. And we get a chance to buy them. I was actually kind of surprised that, we got to the initial points that I mentioned in the chat room yesterday afternoon and in the video initially. And then later I was thinking, the volume wasn't that good. We're not going to dip that much. We got to be a little more aggressive with our buys. So I think initially I was looking for like 133.11 plus, which was the pit open. I ended up buying them at 13 plus because it didn't look like we'd have enough ammo. The market went right to 11 plus last night. I probably would have had an MIT, so I would have been filled, but I ended up buying the 13 pluses. Either way, it was fine. Got out of them this morning. Probably got out a little bit too early. It's okay. Scale in, scale out, I guess, is the way to do it if the market's giving you enough room to scale in and scale out. We're not really getting those big ranges at the moment. We'll take what we got. Today's opening ranges, we'll play the same game tonight. Look for a dip back to the opening ranges. On the 10-year, the pit open was 15 plus. Take a shot at that. Maybe an oddball chance of getting back down to 13 plus. A lot traded there last night. I think that would be probably a better spot, but maybe a scale in 15 plus, 14 plus, 13 plus for whatever amount you want to buy. Stops have to be below 09. There really isn't a good marker down there, and even the 09 level, I think we traded through it by half a tick Monday, yesterday, and then snapped right back. So it's tough stop placement. Maybe you trade smaller and put your stop further away. That's what I've been doing. The bonds 149.21 was the pit open today. The big volume was right in that like 18 to 22 area early in the session before the pit opened. I think that would be the best spot. We'll see. Maybe we can get down there. The other thing on the upside, I keep looking for the market to meet these objectives. The equals swing, C equals A, 133.22. And we got up to what, 21 plus, and 150.14 in the bonds, and then what do we get up to, 10? We keep falling short, so the ranges are getting smaller and smaller. We keep falling short of these objectives. It looks like a consolidation pattern. Probably want to be careful if we do break out of these ranges. See how the market trades. We've seen a lot of what the Wyckoff analysts call up thrusts and springs, where the market will break through a resistance area and then come right back into the range again. That's an up thrust. Or break below a support level and then come right back into the range again. That's a spring. If you get these breakouts, you got to be nimble and try the trade. If it sells through, if it breaks through that support level, you try to put a short on, but immediately have your stops in. So if you do get a whipsaw, the spring or the up thrust type trade, you don't get hurt too bad. And maybe even go the other way, because what happens with these springs and up thrusts is once you get out of the range and you poke outside of it and you come back in, we tend to go back and test either the higher end of the range or the lower end of the range. So, you got to stay nimble. That's the best way to trade it, especially when the market's not really trending, and we're not trending right now. If anything, we got a minor uptrend going on right now, but we're still within the range of, the last year? I don't think we're getting out of that range either. There's, too many crosswinds here. I just don't see us getting out of this range, unfortunately. I think we can go even higher, though. Fed's talking about buying a lot more. An interesting comment yesterday that they might Operation Twist expires in December. Remember, they might replace it with a similar situation, but using mortgages instead of treasuries, where they're selling short-dated mortgages and buying long-dated mortgages. That would be interesting. That would not be a big factor in the treasury market. That would just leave us with the mortgage buying of QE3. That would give us a little bit more wiggle room, I think, in the treasury markets. We would sure like to see that, personally. We'll know next week. I think the Fed meeting's December 12th, so mark your calendar. That's going to be a big one. Obviously, the unemployment number coming up this Friday. Make sure you guys join us for the webinar Thursday, I believe. think so. It's usually a Thursday before unemployment. Okay, parameters are set. Same kind of trade. Look to buy a dip tonight. We'll sell them to the Fed tomorrow. Tomorrow's only one buyback. They're buying notes. On Thursday, 2 buybacks. 1 in the morning, 1 in the afternoon. I don't see a good short setup here, even with the unemployment number and the market's fairly long. I don't think we're going to see a real good down trade in this market, unfortunately, until we get through this unemployment number at least. Well, we'll do what we can. Have a great night. Beautiful 60-degree day in Chicago again. I got to go. Enjoy the day.